Hey everybody, welcome to the chapter 17 guided assignment. So this is the first chapter where they introduce the idea of a predetermined overhead allocation rate. And that's a little confusing, but overhead, as we mentioned in the last chapter, is all of those costs of manufacturing that aren't specific to a single unit or a single item that you're producing. So those include the manager's salaries and the cost of renting a production facility and so forth. Anyway, so one way that companies try to make an estimate as to how much of that overhead gets charged to any specific job is by creating an estimate called a predetermined overhead allocation rate. And so that's going to come up in this assignment. And so let's just get started, and hopefully it will become clearer as we go through it. So Sunrise Construction is a home builder in Arizona. They use job order costing system, in which each house is a job. So because it constructs houses, the company uses an account titled construction overhead. The company applies overhead based on estimated direct labor costs. For the year, it estimated construction overhead of $1 million and direct labor costs of $2,500,000. The following events occurred during August, and then we have this list of events. And then the first thing we're supposed to do is calculate their predetermined overhead allocation rate. So the only thing you do when you're figuring out the predetermined overhead allocation rate is to take the estimated overhead and you divide that by the estimated cost driver for that overhead. In this case, it was direct labor hours, or direct labor costs. Sorry, that's how they do this one. So our estimated overhead cost, it told us, let's see, is $1 million. And the total direct labor cost they expect for the same period is $2,500,000. And so we divide that, and that'll give us our predetermined overhead allocation rate. Or 0.4, 40%, I guess. What that means is, as we go throughout the year and we actually start to do this work to figure out how much allocation of the overhead to allocate, we're going to just multiply our direct labor cost by 40%, and that's the amount of overhead that we'll apply to each job. It's 40% of its direct labor cost. All right, so now it wants us to prepare journal entries for the events. So we've done journal entries. This shouldn't be too hard. This will be a review of things you learned in Accounting 1. Purchase materials on account for $500,000. So we'll show our raw materials inventory increasing by $500,000. Inventory is an asset, right? So it'll go up just on a debit. And then we're going to have our our accounts payable, $500,000. I don't think there's any notes, which is nice. B, they requisitioned direct materials and used direct labor in construction and recorded the materials requisitioned. So all we're going to do is we're going to record this as a work in process inventory and our raw materials inventory going down. So as we use raw materials and start to build houses with them, then they're no longer raw materials. Now they're work in process. So that's sort of the process by which we do this. So what we're going to do is we're going to figure out how much raw materials we used here. So 50,000 plus 63,000 plus 61,000 plus 81,000. There's our direct materials that we're going to move from raw materials into work in process. So we're just doing the materials. It made it, that's, I got a little confused because it said and use direct labor, but it tells you right here, record the materials requisitioned. And now it's going to say they incurred total wages of $220,000. Use the data from the item B to assign the wages. So we can see that what we have to do is first of all, any direct labor that goes into producing something is going to become part of our work in process inventory. So this is what's a little different than merchandisers is as we use labor, we're putting that into the inventory. So we're taking our raw materials, adding labor to them, and now our work in process, the total cost of that is the cost of the raw materials plus the cost of any labor we've put into that. So that's a little bit different too. So what we have to do then is figure out how much of our labor that we incurred, and it looks like we incurred a total of $220,000, how much of that is direct labor, which will go right into our work in process, and how much of that would have been part of our overhead. So the way we do that is we just take this information, direct labor, for each house, so 49,000 plus 34,000 plus 58,000 plus 56,000. So that's $197,000 in direct labor, and that direct labor is going to be put into our work in process inventory. And then the remainder is going to go to construction overhead. So if I do 220,000 minus 197,000, that's the amount of overhead we're applying. We're not applying, that we're actually charging, because we know we actually did pay $220,000 in wages, or incurred that cost. All right, now we'll enter the depreciation on our construction equipment. So again, depreciation is going to be part of our construction overhead, right? Those are costs of construction or manufacturing. In this case, it's construction that we can't put on any one job, right? We can't say this depreciation goes to this house or that house because all of the equipment is used for all the houses. So our depreciation expense is $6,900. And we'll list that as accumulated depreciation. All right. We have our other overhead costs incurred. That's going to include, let's see, equipment rentals. We paid cash for $40,000, and worker liability insurance that we paid for $3,000. Oh, shoot, we didn't pay it, it expired. So we're going to show our cash going down by $40,000 and our prepaid insurance going down by $3,000. We'll charge that all to construction overhead. Nope, 43,000, sorry. All right, now we allocate overhead to the jobs. So you can see that we were actually charging overhead throughout the year as actual overhead costs came up. And then we use our allocation to apply that to the work in process inventory. So the way we do that is we calculate the amount of overhead using the predetermined overhead rate. So our overhead rate we calculated way up at the beginning was 40% of direct labor cost. So again, we have our direct labor cost right here, 49,000 plus 34,000. We actually added this up earlier, but we'll do it again. There's our total direct labor cost. Multiply that times 40%, and that'll give us 78,800, which we will apply or allocate to our work in process inventory. And then we're going to credit the construction overhead account. You'll notice as we've been having or incurring actual construction overhead costs throughout the period, we've been debiting that account. So in the end, we'll have this balance between the actual costs we've incurred and the amount that we allocated. All right, completed houses 402 and 404, which means we move that cost from work in process inventory to now to finished goods inventory. That means it's ready to be sold. And we know the costs of our house by looking at, well, all the costs we put into each house. So to figure out the total amount we spent on each cost, we have to take the direct labor and the direct materials and the overhead for that house. So for house 402, we would take 50,000 plus 49,000 plus the direct labor, I'm sorry, the overhead, which would be 49,000 times 0.4, right? Because that was our predetermined overhead rate times the direct labor. And then for house 404, we would take 61,000 plus 58,000 plus 58,000 times 0.4. There's our total cost of those two houses that will move to finished goods inventory and move out of work in process. They're no longer in process, they're now finished. All right, now we sold house 404 on account for 230,000. Maybe we should have remembered what the individual cost of house 404 was. So we're going to begin by recording the revenue from the sale. Don't worry about the expenses yet. We'll do that in the next step. So for the revenue, we'll show accounts receivable going up by 270,000, and we'll show sales revenue of 270,000. Now we're going to record the cost of goods sold. So because I didn't write it down, I'm going to have to recalculate the cost of just house 404, which was 61,000 in direct labor plus, I'm sorry, direct materials, 58,000 of direct labor plus the manufacturing overhead, which was 58,000 times 0.4, or 142,200. So we'll record that as a cost of goods sold expense, 142,200, and we'll move that house out of finished goods inventory because it's not ours anymore. We sold it to the customer. Now we get to do a TAccount. Did you hear the joy in my voice when I saw that? So we'll view our journal entries, and then we'll do our TAccounts. So we're just going to do work in process and finished goods inventory. So here we have work in process increases by 255,000 on B. And then it increases by 197,000 on C. And then increases by 78,800 on F. And then decreases by 260,800 on G. And that's it for work in process. So we can gives us a balance of 270,000 on the debit side. Finished goods inventory shouldn't be any of these earlier transactions. Here it increases by 260,800 on G. And then it should go down when we sell the house at H by 142,200, which will give us a balance of 118,600. Hope I didn't make any little errors in my typing. We're good. All right. So now, now we're supposed to add the cost to the unfinished houses. So this is a little confusing, so you just have to take it step by step. I'm going to go back to the events list. All right. So the unfinished houses, if we finish 402 and 404, then it's house 403 and house 405 that are unfinished houses. Our direct materials, again, that's given to us. So for house 403, it's 63,000. For house 405, it is 81,000. Our direct labor for house 403 is 34,000. And for house 405, it is 56,000. Our construction overhead is for house 403 is 34,000 times 0.4, which is 13,600. And for house 405, it is 56,000 times 0.4, or 22,400. So now we'll say 63,000 plus 34,000 plus 13,600 is 110,600 for house 403. House 405 is 159,400. Our total work in process inventory is 159,400 plus 110,600. That's not right. 159,400 plus 270,000. So that's a good sign that that matches up with our balance here in work in process inventory. All right. Now let's see. It said as cost to the completed house that has not yet been sold, and show that this equals the balance in the finished goods inventory. So we sold one house, right? We sold house 404, which means we still have house 402 remaining in finished goods inventory. So house number 402, we have our direct materials of 50,000, our direct labor of 49,000, and our overhead, which will be 49,000 times 0.4, 19,600. So our total cost then is 118,600. All right, so now they want us to compute the gross profit on the sale. Remember, we sold house number 404, sorry. Our sales revenue, which we recorded up here on the sale, was 270,000. And our cost of goods sold was 142,200. Our gross profit then will be 270,000 minus 142,200, or 127,800. And finally, I guess they're just saying, what sort of costs do we have to cover with our gross profit? Because remember, gross profit is the money we have available for covering all of our fixed and administrative costs. So this could include administration, customer service, design costs, distribution, which is selling these things to people, income taxes, marketing, and research and development. So if you think about what all these have in common is they're non-manufacturing costs. All the other ones we didn't pick will be on things like wages, which is a manufacturing cost, and direct labor and direct materials. Those are all manufacturing costs. And that should do it. So I know that one was a little bit long, but I think this is a really good comprehensive problem that will make it a lot easier for you to do the rest of the homework. Have a great week, and don't forget to let me know or to reach out if I can help in some way.